Welcome to another educational video. Now today's video is going to help you start reading those charts like a pro, going through the false breakout pattern and using my 4 phases in the market. So if that is going to help your trading, then make sure you watch this video all the way through and don't miss anything today. Now straight away, we're going to go straight in this video today on the pound US dollar. We're going to look at these phases using this pattern. Now the actual pattern we're looking at is where price is in that consolidation phase, looking for a break to the upside, break back down, breaking structure. This is going to create our second phase to the downside, our markdown. This will then be a pullback retracement phase, coming back into an area of supply or an area of imbalance, using the Fibonacci retracement, then your reversal phase for our entry with our target, which is probably those previous lows. Now that is our typical price pattern we're going to be looking at today. We'll also look at the other way with those 4 phases in the market, which you can learn much more on at the video in this video. So make sure you watch today's video all the way through to the end so you understand how you can read these markets like a pro, and then watch that video afterwards so you can understand those phases in the market. These 2 videos together with everything else you learn in the channel is going to give you a supply and demand trading strategy you can start trading with today and start seeing those profits. Now, this area here on the chart, this is our large area of consolidation. You can see where price has pipped above, or should I pushed through and then back down, and then we broke back to downside breaking structure. There's our phase 1 consolidation. There's our markdown phase. That's our second phase. Then the continuation downside makes this low, and this is our retracement phase. Now this is going to be easier to see on a daily, but I want to show you on a 4-hour that you can still see this on different time frames. But back on a daily time frame, you'll be able to see that this is our consolidation. This wick to the upside is where we see that break above, taking these stops in the market, and then we have the break to downside breaking structure. Now once you can see this, you're going to start reading these charts differently. Once we've seen price making this high to this low in the market, this is our swing to downside. We can then apply our Fibonacci tool from the high to low. We're looking for price to come back to this Fibonacci zone area. And again, you'll learn more about that in the video at the end of this video. We're then going to look for areas of imbalance or an area of supply. Now, for our area of supply, we're going to mark off this bullish candle right here. This is remove this Fibonacci. You can see we've now come into this area of supply and this Fibonacci zone, and you can identify that this is a great zone to look for a trade back to downside, targeting those previous lows. That's exactly what we went through just a moment on that sketch. So once more, go through it. This is our consolidation phase, phase 1. There's our break to the upside, taking those stops. It's the false breakout, and again, video will be linked below in the description of this video with the other video to watch them both after this video. We then have a markdown phase, which is phase 2. There's our retracement phase, phase 3, and this is our area of supply with our Fibonacci zone, and this is where we're looking for a trade back down, which is that phase 4. And our targets will be this previous low. So if you're taking that trade, you can see that using that area of supply, this is why supply and demand trading strategies are so great. You're going to use a set and forget strategy right at this area, which means you'll be placing your entry at the open of that bullish candle, the stop above the high. The target will be these lows or just before them, and you've got an 8-to-1 profit target. Now, of course, you can increase that risk to reward even higher if when we come to this area on the chart, you start going down to lower time frames looking for the confirmation entry. Now, there's much more on the entries with a supply and demand strategy. I'll leave it linked above now for that video to understand those entries. But this is using that pattern and those 4 phases in the market. Now, we're going to look at this area now, but we're going to go down to the 4-hour once again. Now, on the 4-hour time frame, you can identify we have this area of consolidation. We have the sideways movement, and then price breaks to downside. Now we have price pulling back. So this is your phase 1, phase 2, phase 3 retracement, and your phase 4 to the downside. Now that's what you'll learn in that video later at the end of this video. But we're going to look at another pattern inside this area, which means we go down to the 1-hour time frame. and you'll be looking at, let's just shrink the chart out. So you'll be looking at this pattern on a 4 hour, you can see, with the breakout. Now on the 1 hour, you can also identify, we have this area of consolidation, where we have price moving sideways. We have the push up, breaking these highs, taking those stops, and then we have the mark to downside. So there's our phase 1. There's the pattern, taking those stops, and our mark down is phase 2. There's our retracement phase. So at this point in the market, you'll be looking for your entry. We'll be using your Fibonacci tool, marking out this area on the Fibonacci retracement. That would be your ideal area to look for a trade. And you can mark out this last bullish candle as your area of supply, and you'll be looking for an entry pulling back in. And again, you can either look to take a set and forget strategy entry here, or once price comes in, you look for that confirmation entry or even a 1 candlestick entry. Price then falls off. You could target those previous lows, your first target, and then perhaps target these lows, or even look left for other targets to target. That is how you start using this pattern and read those markets like a pro. Now since then, we can see price dropped through from here. We've dropped straight down. We haven't pulled back. I can see straight away we haven't pulled back high enough for an entry. I want to see price pulling back above that 50%. Let me just quickly mark it off. You can identify we haven't even come above that 50% at that point in the market. And more importantly, I also see an area of imbalance was been left behind here. That hasn't even been tested either. So once price then drops down and breaks this area of structure, then we're looking at price continue to fall and it pulls back once again. So if we now continue going forward, we didn't get this trade, but now we can do the same thing. We can mark this out. We can also identify that this was a ranging area, which was our consolidation. So this is our phase 1. We have a small push above this high, and then we have the mark down, which is phase 2. This is our phase 3 retracement, and then we're looking for price to pull back. So we have our Fibonacci area. We're above the 50 here. We pop into our Fibonacci, we retest that area of market structure, and we also have, let me just get this tool, an area here of imbalance. So you can see the market has done everything you're looking for, and right here you could either look for an entry, set and forget strategy, or you could look for a smaller time frame with a reversal. Now we're not going to go into those entries today because there is another video on the channel you can look at that. But now we're going to look at this here on the chart, and now go down to a 15-minute time frame. So you can see this works on a fractal nature. Now again, we have price in this sideways consolidation. Notice how price is in that consolidation with that push up, removing those stops. We've been left above the high of consolidation, and this is where people either sold at the high or they're looking at a breakout. We then have that mark down once again. You see how this pattern works over and over, and we're looking for that retracement. Now again, we can identify here that the retracement doesn't come high enough. We mark this off. We only come to the 50%. We're not interested in taking that trade. There may be others who'll be looking at this saying, well, we've got this area of supply, we'd sell there. But for me, that's not the way I look to trade. I want the best possible entry. Now what happens again, we can see we have a break of structure. We don't have this low. We have another break of structure here in the market. Again, we can then apply our Fibonacci from the high to the low of that move. Where does it come back to? We come back to our Fibonacci. So this occasion, we don't see the normal traditional pattern we're going through today, but we do have the consolidation, which is phase 1. This is what you'll learn more the next video you go through. We have the mark down, retracement phase. There's your entry area. Inside that Fibonacci zone, we have an area here of supply. That would be my entry on a set and forget strategy. Stop above the high. First target these lows. Second target these lows here. Now you can see that is a nice trade, understanding the use of this pattern in the market and reading the markets like a pro, like I'm showing you today. Quickly, I wanted to let you know about the Forex Masterclass course, which is going to teach you about those supply and demand and smart money concepts. You head over to the site now. It's members-area.northgapextrader.com forex.com/masterclass. I'll leave a link as well below in the description of this video. Go through this page, you'll learn everything about what's in the course material. And if you head all the way down to the bottom of this page, you'll find there's also a link where you can go through and look at the actual course lessons and what's involved inside this Forex Masterclass. These 4 phases using this and this pattern is going to help you to read these charts. Now, even when price comes down to this area here, we can witness the same price action again. We have this area of consolidation. We have price pushing up, taking out those stops, mark down, and retracement again. Hopefully you start to see this happens over and over. This is our Fibonacci tool. We pull back into our fib zone, and looking at the chart, I can identify that this candle right there is a drop-based drop on the 5-minute most probably, and you'll be marking out an area of supply here, looking for your trade, and again, just perhaps targeting these lows. A nice trade. So that is the simple way to look to read these markets using these 4 phases and this price pattern. Now, if you didn't see the trade I've taken today, check out the community tab. We'll go to the US dollar CAD now, but I've taken a trade on this pair. You'll be able to see the entry I took inside that community tab. I want to go through this area on the chart, exactly how you can read it, just like I did now on the previous pair. Going to the 1 hour time frame, you can identify here, we have that consolidation phase, okay, the market, consolidation sideways, we wick to downside, taking out stops. We have the push up, which breaks out of this high. We then do the same thing. We pull back into this area. So we just remove everything. We then create this area again of consolidation phase 1. This is our retracement phase now again on this first trade. We're looking for that entry on a 4 hour time frame. There's a good area perhaps to look for a trade. This is going to be in that Fibonacci retracement. I don't even need to check. So again, this is phase 1. This is then the mark down, breaking those stops. There's our mark up, phase 2. Then looking for a retracement. Again, we'll be looking at a 4 hour probably area of demand. Again, there's going to be your Fibonacci zone, and price goes up, breaking structure once again. Do you see how this pattern works? Again, we have this phase in the market, which is that consolidation. Large area of consolidation, the break to downside, which comes into this area of demand. There's an area of demand on the 4 hour, and this area here on the 1 hour. Now the Fibonacci is around here, so it's inside that zone as well. And we have a nice wick in and a push up, and you can see the markets continue to go higher. Now looking at a 4 hour time frame, you'll see this area better. We have this nice candlestick. It's a nice bullish engulfing candle. Now I missed the entry down here in a lower time frame. We then have a nice candlestick here, so I've taken an instant entry on the close of that 4 hour. A stop here to give us some room in the trade, and price has gone straight up. Now I've already taken some off this trade. I've taken it off right here. What are you witnessing right now on this pair? You're seeing go to a 15-minute, we're seeing a sideways consolidation again. So we're in a phase 1 once again. Now going to a daily, you'll be able to identify that I've marked from this high to low, which broke out of these lows of market structure. The reason I've took some off this trade is that we came into that Fibonacci zone. So I've taken some off that area. Plus we have this drop-based drop area here in the market. Now I'm going to see if I can hold this trade and see how far it will go. You have to really read those markets and understand those phases. So we can identify now the market's in that phase 1 again. So this is going to help you with your trading to understand the way those markets move. And as I said, you'll be able to learn this pattern and much more with my help inside that Forex Masterclass. So if you are looking for that further education, I do suggest checking that out, and the link is below in the description of this video. Now popping up next is that video to go through those 4 phases in the market so you can really understand how to start reading those charts. Oh, and before you go, if you really want to take your trading to the next level, then you need to check out my free pre-recorded webinar, link below in the description of this video, so you can start learning how you can build your account balance without blowing your account by risk and money management. I hope to see you there.